Yeah, hello everybody. I see there's a few people on the Zoom call, and we're streaming live now to YouTube. And I can see, yeah, there's a few people also following us on the YouTube. So we're going to get started. Just want to check, can you give me heads up? Can you all see me and hear me?
Yes, we can see you. We can hear you.
Okay, that's great. I'm going to turn the recording on, just one moment. The recording is on, and as usual, everyone's free to ask questions as we go along. I've not needed to wait till like specific question and answers session. But remember, anything that you ask is recorded, and the recordings are going to be available for people to have to watch afterwards. Quite a few people, I think, told me today that they can't take part on the live, but are waiting to get the recordings to to look at what we're going to be talking about tonight. So we're going to get directly into the subject: how to start investing successfully in property. So first of all, why invest in property compared to other investments? And we're not saying that property is the only thing to invest in. Quite a lot of people are investing in stocks and shares, in businesses, which can, of course, be good investments. But like anything, it's a question of knowledge. I do invest a bit in stocks and shares, but I have virtually no knowledge. And to be quite honest, I'm not successful in it. Probably as well because I'm not focusing on that. And I'm focusing on property and making sure that what I'm doing in property is successful. Yeah, so it's difficult to, or not possible to do everything, or not possible to do everything if you want to try and master everything yourself. Yeah, so why invest in property? Stability compared to other investments. We can see obviously both stock exchange and obviously crypto is very volatile. Property tends to be a lot more stable. Obviously, there are dips in property value, but over time they're always recovering and getting back to the same value and increasing in value. And another key reason to invest in property, obviously, it's tangible, it's real bricks and mortar. And this is something that is not available with, for example, generally with stocks and shares. With property, we can use leverage. So with property, we can go to the bank and borrow money towards the purchase of a property, generally up to 75% of the value of a property. So as long as our returns as a percentage are higher than the rate at which we're borrowing, then that is leverage, and that enables us to get a higher return on the money that we actually physically put into a property deal. So there's three key things we're always talking about in property: income generation, otherwise known as cash flow. So that means that we got money in a deal when we paid the mortgage and all the operating costs, the rent that we get minus those costs, and the mortgage costs obviously should be positive, and the higher that is, then the more cash flow that we have. When we're looking for cash flow, we're generally looking in areas of the UK where property prices are lower. Obviously, rental is going to be a little bit lower, but not in the same measure, so we're getting higher cash flow. Other thing on property, we're looking for capital appreciation, so the value of what we buy increasing over time. Historically, people have been looking to London for the highest capital appreciation. Over the last probably 3, 4, 5 years, in reality, we've seen higher capital appreciation outside of London than within London. But still, obviously, London is the capital. There's always a strong demand for a property, and we are likely to continue to see capital appreciation. And then the third thing that we mentioned is leverage. We can use borrowed funds to increase our return on investment. So let's go on to the next one. I hope you can see this. This is a property investment flowchart, which is for someone who's like starting investing in property, or maybe you're already investing but not quite sure where you are in the grand scheme of things. We put together this flowchart to basically follow and help people make decisions about how to invest in property. So we're going to run through this. We're going to start at the top. So the first question is, do you want to learn and understand deeply how property works, how property investment works, potentially with a view to directly choosing properties and looking after them yourself? Or do you just want to invest and get the returns from property? So we're either wanting to learn and understand deeply, in which case we're on the left side, or we just want to invest. In that case, we're on the right-hand side of this flowchart. So let's say we're on the left-hand side. We want to learn, understand how property investment works, to be able to get maximum returns. Then we've got a few steps. Our first step is to get basic education and understanding of how property investment works. We need to do this, sort of have our basic education, because there's lots of different strategies to get money from property, and we need to understand the different ones, have an overview of that before then deciding on which strategy to focus on. We've got a little note here, decide on strategies with this little asterisk. And here we've got the explanation. We're deciding on strategies based on the amount of funds that we have available. If, for example, we've decided we want to profit and use by getting into commercial property investments, then we probably need a minimum of maybe 200,000 to buy suitable properties. So if we haven't got that amount of funds, then we can't go for that strategy. And if, say, we've only got maybe 10,000 of funds, but we really want to get started in property, then there are some strategies that we can use. So you could choose those, get the detailed training on those strategies, and get going. So deciding on strategies. Then, if you're looking to get involved yourself and really understand, to get detailed training and education on those specific strategies. And then we got the next question. So let's say a very common strategy that people use is the one that we call buy, renovate, rent and refinance. So we're buying a property, renovating it with the aim of adding more value than the money that we put in, so that when we refinance, we can get most of our money out to recycle it and get on to the next deal. So let's say that's a common strategy. Obviously involves finding properties below market value. It involves renovating them, because generally it's doing that is enabling us to add more value. It involves obviously getting them tenanted, the ongoing looking after them. So let's say we're focusing on the strategy. We now need to decide, do you have time and motivation to do it yourself? So if the answer to that one is yes, so maybe you've got a full-time job, but it's not ultra demanding, and after those 7 or 8 hours of work, you've still got energy and time to start looking at properties, start finding things, potentially managing the renovations. Then we're here on the yes, we've got time and motivation to do it ourselves. So in that case, we've got the yes here, and there we need to set goals make, plan, take action. And I've got the comment here, consider mentorship. It depends on individuals. Individuals might be really self-motivated, able to set goals and get on with things themselves, in which case it's fine. Or they might need that like sort of accountability, someone who's going to be with them saying, what are you going to do? What's your goals? Break it down into months and weeks, and then every couple of weeks saying, look, what have you been doing? What have you found? And reviewing things in order to get fast to adequate results. So this is the direction of the person that wants to really get involved and do it themselves. Obviously, when you're doing it yourself, that's going to be the maximum profits because you're not paying someone else to find properties or paying someone to project manage renovations and things like that, but it requires time. So if we get to this one here, do you have time and motivation to do it yourself? There can be an intermediate answer. This intermediate answer is no, I don't maybe have the time or the knowledge or sufficient confidence to get into it myself straight away, but I might in the future. In that case, we've got like different possibilities. We can do things which are called earn and learn, sorry, or joint ventures. What that means is earn and learn typically is typically it's lending funds, obviously getting return on those funds, either interest and or share of the profit, putting that into a project with an experienced developer. And typically when this happens, it's also possible to come on site to get regular updates on the project. So at the same time as making your money work for you, typically when people do that, for example, when we're doing this, when we've got projects where we've got a temporary need of funds, maybe we're doing some development and we're able to refinance in 6 months. So rather than use bridging, we might say to potential investors, look, we need a total of, let's say, 80,000 for this project. If someone wants to lend us all or part of that, we'll give 1% interest per month. And you can also come on and understand how the project works and get the learning from that. Or there can be, joint ventures, which also is where investors come on with an experienced developer. Typically, a joint venture is not like fixed interest over a period. There is more a question of investors putting money in and then either when everything's finished, getting that money back and a share of the profit, or getting part of that money back and leaving some money in the project, having equity in the project and ongoing income. So we've got this intermediate one of doing some things with an experienced property investor and developer to get that experience. And then potentially when you get the money back from that project, you might then have sufficient confidence, maybe a bit more time, and then you can go down this loop on the left of spending time and looking after things directly yourself. Or we've got, do you have time and motivation to do it yourself? So you've found out exactly how, for example, a BRR project works. You've understood all the steps, understood what's needed to do to find the properties. You've understood also that it's not like exactly a walk in the park. It's not like 5 minutes here and there. It is a real focus and getting things done. So you've decided, great, I know how this works, but it's not for me. In which case we're on the no, and then we're going to go to here, which is in the same loop as people who just want to invest in property. So we've got this one on the right-hand side. Do you want to learn and understand deeply or just invest? So there's quite a few people who understand their property is a good investment vehicle and they just want to invest and get those returns. I'm still going to say, get basic education and understanding. Don't invest with the first person or project that comes along. Understand what the basic strategies are. get a feel for what is the typical returns possible from the different strategies. Because if then if someone's coming and saying you can get twice the typical returns, then that actually is an indication of danger. And also on the same at the same level, if someone says, for example, on a I don't know on an earn and learn, we can give you 0.5% per month, then that's just not standard thing. It's not enough. So get that basic education understanding to understand what to invest in. Same thing there. Decide on which strategies to go for, and then we've got quite an important decision. And this decision also, the other two channels decisions here all come back to the same one. Here we're looking for hands-off investments. And the question is, do you want properties that you own 100% yourself, or would you consider going into joint ventures or pooled investment? The difference between the two is that when you've got a property, obviously, that you're owning 100% yourself, be it a house or maybe, for example, a mixed-use property, shop with flats above, then obviously you know that you have absolute control over the property. If you want to sell it, you don't have to consult with business partners, make some decision on whether the asset is going to be sold. You can do what you want with it. The downside is that you can get good returns from this, but typically it's possible to get higher returns in joint ventures or pooled investments, because these generally obviously are much bigger projects which are carefully chosen to be able to get a higher return on investment. Because obviously if an investor, a property developer is, well, this should of course be the case, is choosing a project is because they can get a good amount of profit from that. And obviously that profit can be shared with hands-off investors. So if we're in the loop here where we want to 100% own the properties, but we don't have time to do it ourselves, we want it to be hands-off, then obviously we need to find and work with good deal sources, people who can find good property deals and actually do and properly present the calculations. But also remember that getting a good deal, if it's going to be hands-off, doesn't stop with the paying the sourcer a fee for finding the deal, doing the conveyancing and ending up with a property. Because once you have the property, generally there's going to be some renovation to do or some refurbishment to get it to the right value to refinance or to get it in a good condition to be able to rent it out. And this requires careful project management. Project management just means understanding everything that's needed to do to get the property renovated, obviously understanding all the compliance, even for standard rentals, there's quite a lot of compliance requirements, and those compliance obviously become bigger if we're doing HMOs, so multiple occupation, and even bigger if we're doing large HMOs or mixed-use properties where we've got a mix of commercial and residential in the same building. So generally, find sources or people that can both find the properties and also project management, the development, and bring them to a stage where they're income producing. Or the other option is consider joint ventures or pooled investment. There, obviously, there's less things to sort of be concerned about generally once the project starts and you've made the investment, because there's an experienced developer that's looking after it. And because that developer has also got skin in the game, they're going to be or should be doing everything to make that successful. And in both these cases, finding and working with good deal sources, project management managers, or going into joint ventures a key thing is to look at references of past projects that those people have done and to speak with customers of those investors and developers. So this is a flowchart which I hope can be useful to a lot of people. Before we go on to a few more slides, are there any questions on this flowchart or any comments?
So far, so good for me. No questions. Thank you.
Okay, great. So we're going to go into a little more details. So some of these are just a little expanding on what we've seen in the flowchart. So key considerations before starting investing in property. And it's really important to sort of have this flowchart and have really in your mind what and decide how you're going to do things. Because either you're going to be really involved or you're going to be in the middle where you want to fully understand how things work, but have someone else do it for you. Or the last one is have the basic understanding. You must have that basic understanding, and then also have someone do it for you or going into a joint venture. So yeah, these are some of the key questions. Do you want to learn and understand all the details or just the minimum to invest soundly and get the returns? If you want to learn, do you then have time and desire and motivation to get involved and do things yourself? Then obviously understand how much money you have available to start with. Don't think that property is a get rich quick scheme like some people are saying. Can be a sound investment, but need to plan carefully, and don't put all available money into one project. Keep some reserve for unexpected events. Obviously, I'm advising on and speaking about different property strategies. I'm not a financial advisor. And when it's question of how much money to invest, what to keep maybe for other things, pension and all that stuff, obviously that's not at all what I'm doing. There are obviously qualified financial advisors that can advise on those areas. But common sense is you don't put all the money in the same thing, and you do proper due diligence, understand what projects it's going into. And then another consideration, do you want to go it alone or do projects with other people? Education is really important in any sphere. So how do you get that education? So either we're talking about basic education on the different property strategies. There's quite a lot of information that we're giving on these webinars. The recordings of the webinars are on my YouTube channel, so it's possible to go back and look at them. Then, network meetings, meet other investors, get to know and speak with people that have already done the things that you're looking to invest in. And also as part of basic education, there are basic online training packages. We do one. It's not that expensive, actually. It's £120. It's 12 modules, and it goes over most of the typical property investment strategies. We do them, and obviously there are different companies that do them. We don't have a monopoly on this. And look at what exists and find ones that are suitable for you. Or full training. If you're looking at doing something yourself, if you're looking at doing, for example, implementing the the BRR, buy, renovate, rent, refinance strategy, there's a massive amount of things to take into account to do it successfully and to really get a good return on the money that you put into it. And that is, I would say, always worth the money in going into more in-depth training, getting the training materials and putting that in front of you, making notes, and making sure that when you actually get started, you are really following all those steps. So there, more in-depth training, and same thing, but maybe a little more pronounced regular attendance at meetings, and really getting to know people who are successfully investing in property. I think we've got a few more, maybe a slide about network meetings. A key thing is there are two types of network meetings. There are network meetings where it's everyone going and having a drink and chatting with each other, which is good. But there are also those which are more structured, where there's obviously like networking, meeting people, but there's also people, maybe often there might be a broker there talking about how things are happening on the lending side, and then there'll be speakers maybe covering a specific subject, or maybe doing a case study of some of their projects. I'm doing that from time to time, like speaking at some network meetings, either on a specific subject or going through some case studies of projects that I've done myself, or as joint ventures with other people. So first step in getting successfully investing in property is education. Step two is, do you have time and desire to get involved and do things yourself? So it's yes or no. If yes, then make sure you've really got that time. Make sure you've got the proper education, and consider mentorship to have that push and to achieve results. And if you don't have that time, don't try and do something in the middle, because it'll be neither here nor there. If you don't have the time, but let's, for example, just take buy some deal and then don't have someone look after the renovation, and you don't have time to look after it and check that everything's compliant, then that can lead to problems. So either you're fully focused and doing everything yourself, getting the knowledge, or you're made that decision, no, I understand how it works. And it's good sometimes to have that in-depth understanding, because if you're having someone else find properties and project manage them for you, with that education, you can ask all the right questions, and not managing what they're doing, because they should be able to do it themselves and have sufficient experience. But you can ask those questions to determine and ascertain that they have that appropriate experience. Hands-off property investments. So again, we've got the same question. You want to own full properties yourself or invest with other people? If you want to own full properties yourself and it's going to be hands-off, then you need to find obviously a good, reliable person or company who can find the properties, but not just find them, get them renovated and rented, and also help with the finance and other things like the conveyancing. That means introducing you to good brokers, good conveyancers. Obviously, conveyancing is regulated, but at the same time, there are ones that are, like in anything, that are slow, and the ones that are really fast. And I generally only recommend working with conveyancers where it's possible to directly speak with the solicitor or the conveyancer that is dealing with your projects, where you can pick up the phone and speak with them, ask questions. Generally, these type of conveyancers will be a little more expensive, but at the end of the day, you get what you pay for. If you're paying for someone who obviously has got that experience and that availability, where you can ask questions about different possibilities. You're looking at a deal. You got maybe thinking like a specific strategy, and you want to run that through with the solicitor, then it's good to be able to do that. Obviously, at the same time, don't expect the solicitor or conveyancer to do things for free. If it's like answering a question for 5 minutes over the phone, then that is typical, and that is what I would like sort of expect from the conveyancers or solicitors that I work with. If, however, I'm looking at making a purchase in auction, and I've looked at the legal pack and there's something there that isn't very clear. I'm not expecting my solicitor to do that free of charge. It's not fair. He's a professional. So I'm going to say to him, look, there's this specific thing. How much is it going to cost to take a look at that and give me some fast feedback on what the risks are on that particular thing. So yeah, choose good, reliable person and company. And remember that there's two types of fees. There's the sourcing fees, and then there's the project management fees. That's looking after the renovation. And project management fees can go a little bit further than that. If, for example, you're looking at operating a property as serviced accommodation and you want that to be set up ready, potentially to hand over to a management company, there's going to be additional fees for configuring and setting all that up. And also quite popular these days is what we call social housing options, which is buying a property and rather than renting it out to a family, renting it on a 5-year lease, for example, to a company that might be housing asylum seekers. It could be prison leavers. It could be local authority people in need of urgent housing. In these cases, generally, there's a lot more administrative work to get these over the line, and there's also quite a few specific adaptations relating, for example, to fire safety and other health and safety aspects, which take quite a lot of time to manage. So obviously, if you're going down that line, which can be good because it's good, stable income, but expect to pay a little more on the project management to get that over the line. Unless, for example, maybe you're sort of skilled and comfortable in doing admin things. So you'll have someone find the property, someone project manage the renovation, but then dealing with all the social housing contracts. Maybe you'd like to do that yourself. So remember, especially when we're talking about BRR deals where the aim is to get most of the money out to be able to reinvest, when it's hands off, obviously there's going to be more money left in each deal, but it's still a good way of getting into property. And rather than just buying one buy to let and forgetting about it, leaving all the money in, using someone who's experienced in finding the right properties, renovating them, and so you can get quite a lot of money out to restart the next one. It's obviously a faster way of getting into property. We call that also momentum investing. So yeah, hands-off property investment. Do you want to own full properties yourself or invest with other people? Investing with other people, there's 3 areas we cover here. One is joint ventures. We've spoken about those. That's getting in with a experienced developer or investor and getting a return on the investment or leaving money in the deal for ongoing income. Pooled property investments are similar, but generally a pooled property investment, we do those more frequently for commercial property investments. And there it's, investing in commercial property and generally where it's already income producing. And then the third possibility is rather than investing with, let's say, unknown people, maybe you have a group of friends or business colleagues who like to pool a certain amount of money together. That can also be a way of getting into property, and then obviously finding someone to find the property, manage it and get it income producing. How much money is needed? So obviously there's different strategies, and depending on how much money you have available can obviously limit the potential strategies. So if you want to own outright a property, then basically need around 100,000. That's what's needed to buy and renovate a terraced house in the lower cost areas of the UK, like up in the north or in South Wales, some areas of the Midlands, as long as it's well outside Birmingham, areas like Staffordshire, Leicestershire, for example. So that's 100,000. If you don't have 100,000, but have, let's say, at least 40,000, it's possible to use bridging finance and get a similar type of house. When you're using bridging finance, then you're using finance 2 times. Using finance to be able to buy the property, renovate it, and then when it's finished and ready to rent out, you're getting a second finance, we call that refinance, to be able to get most of the money out that you put in. When you're using both bridging and refinance, obviously, bridging finance has quite a high cost. So there's more money that's left in the deal. But at the same time, if you've got £40,000, are you going to wait 3 or 4 years until you have 100,000? Or are you going to start straight away? And it's much better to start straight away, get 1 house per year, so that within 3 years, you've already got 3 houses, got the cash flow, rather than waiting to have all the money. Obviously, the more money that you have, that opens up different possibilities. As like we were saying, 150, 200, that can get commercial properties. Even with 100 and using bridging, it's possible to get mixed use properties, HMOs. So obviously lots of different possibilities. When someone doesn't have £40,000, but less, there are different strategies. We talk about rent-to-rent or rent-to-serviced accommodation, which is paying a landlord a fixed rent to basically take the property off his hands with the agreement that you can rent it out, for example, on a room-by-room basis or on a serviced accommodation. And the difference between what you pay the landlord and what you get from the occupants is your profit. But obviously, this is not hands off. This is for people who don't have that 40,000. Maybe they've got 5,000, 10,000, but want to really understand how property works. Then it can be like, I'm going to say, like a good temporary way of getting involved in property, understanding how renting works, understanding, for example, how serviced accommodation works, and using the cash flow from that to start building up the pot to be able to buy your own property. Because in reality, rent-to-rent or rent-to-serviced accommodation is not property investment as such. It's property, but it's like basically a side hustle. It's like a business. And some people do rent-to-rent or rent-to-serviced accommodation as a full-time business, can be profitable. And then off the back of that, they're using that money to start buying property. And so then maybe in the first year, it's 100% rent-to-rent. And then in the second or third years, it's like a combination of both. And maybe after some time, people will, still have the rent-to-rent business, but have like a team managing it, and mainly the property portfolio. And then the other possibility is what we talked about, joint ventures or pooled investments, typically from around 10,000, but sometimes there's ones available from 5,000 upwards. Some of the strategies, just to name a few, obviously, if some of the people listening probably already know or come across these, there's the recordings. Most of these were covered in the first webinar series. So it's possible to go to the videos and learn about these. So the buy, renovate, rent and refinance. Social housing, assisted living, all this stuff. It's more what can you do with a property, but it's good to understand those. Flipping is, BRR is when you're buying a property with the aim of keeping it for the ongoing income. Flipping is when you're buying a property with the aim of adding value and selling it. I'm not a great fan of flipping because when you've done one, then you've got some profit, but you have to immediately start again, and you're not building up that ongoing portfolio and income. And then we've got things like the mixed use properties, commercial properties. Purchase lease options is a good relatively low cost way of getting into property. They're harder to find, needs more time to find. And generally, sourcers are not sourcing these type of deals for the simple reason that when a sourcer, if I find a deal like that, generally I'm keeping it for myself because it doesn't need much money in. Purchase lease option is when you agree an option to purchase at a specific price, for example, within 5 years, and then you're paying a fee for that option to purchase, which can be £1 or whatever you agree with the vendor. And then it's paying rent until you exercise the option to purchase, and then commercial to residential conversions. Note about risks. When we're talking about property, we're sort of saying, asking people, what risk appetite do you have with respect to investing in property? When I talk about risk appetite, I'm not talking about taking, I'm going to say, stupid risks. I'm not talking about risks of like losing everything or making massive gain. When I'm talking about risk, it's more like a question of sometimes we're looking at properties, for example, where if we're able to get planning permission to extend or change the use, then we could get really big profit. And if we don't get that planning permission, we might just break even. So there, if we think we've got a good chance of, let's say, hitting the jackpot, but we know that if we don't get that, we're still able to sell the profit maybe at a slight loss, the property maybe at a slight loss or break even, then if we've got that appetite for doing that type of deal, then that's a good thing. Well, some people might say, look, I want to be sure of what I'm going to be getting. I want to do a standard deal where I know I can get between 10 or 15% return on the money that I leave in. So there, yeah, it's needed to evaluate, make a decision on what sort of risk you want to take. But obviously, don't take risks where it's possible to lose everything. The biggest risks in reality are generally when you're using bridging finance to buy and develop a property. And if that requires planning permission, then obviously there's a risk if you don't get that, then the bridge is going to end, and how are you going to repay the bridge? And those are risks that we don't take. Well, I don't take, and I don't recommend other people to take them. I have taken them in the past, and I haven't always had good experiences. And that's also why it's good to learn from people that have done property and obviously made mistakes, learn from people's mistakes to not make the same mistakes. Build your action plan. So that's specifically, I'm going to say mainly if you're going to be doing things yourself, but even if you're doing hands-off investments, it's good to have an action plan, because otherwise you just leave things and think, I'll think about that later. And you've got money sitting in the bank earning next to nothing, at least you're earning below inflation. Whereas if you actually decide you're going to do something, get a bit of basic education, look at some deals and get your money working for you, then obviously that's much better. And when we talk about action plans, this actually is the wrong way around. Normally we're talking about a 1-year goal. So let's say a 1-year goal for someone who doesn't have any property might be, I'm going to get my first buy-to-let property as a BRR deal. Because that's good to have like some visibility for the year ahead. But at the same time, then start thinking about the 5-year goal, which can be, I want to add 1 house per year, or it might be the first year, I just want to do 1 to understand how it works. Then I'm going to scale up and do 2 per year. From the 1-year goal, break it down into months and break those months into weekly plans. Decide what training you're going to take and do it. Decide about networking and decide about, for example, every month you're going to go to 1 event and consider mentorship. So are there any questions? So I think there are no questions, so we're going to finish on this. If anyone would like a copy of the action plan template, which is based on what we on the previous page, but it's like 10 pages to answer some questions based on the flowchart, basically like self-answering questions. It's not something to fill in and send back to us. It's something, obviously, if you're going to take it further and look for mentorship or something like that, then that's always a starting point that we use. But it's possible to take that action plan template, have it completely private for yourself, and use that to set your goals. So if that's useful for you, request that. If you're on the YouTube stream on the YouTube, there's our contact information. There's a link to the contact details on the website where you can just put a message and ask for that. Or also, if you want to speak more about some of the things we've been talking about, book a 15-minute discovery call. So yeah, thanks for your time. Have a good evening, and hopefully this is useful. And you're going to take action if you've decided you want to invest in property. Follow through the different steps. Decide where you are. Make some decisions, and take action. So yeah, thanks. Have a good evening.
Thank you very much. It's very informative. Thanks.
Thank you very much.
Great.
I'll call you shortly, Trevor, if that's okay. Thank you.
Okay, great. Yeah, cheers. Yeah.
Thank you. Cheers. Bye.